The story really changed, though, after last quarter, where it went from just looking at growth and how much they could drive revenue growth in both of their end markets, right, retail and AWS, and it went to one of profitability and operating leverage. And I think people got very comfortable over the last couple of weeks. We've gotten comfortable with maybe that's actually sustainable. I actually do think it is sustainable, and I think the company has taken the right turn to focus on that, because that gives you more support in terms of valuation.
Yeah. How did you get to the point, and I remember when we had this conversation before you bought the stock, where you realized that the risk that you thought you might be taking was worth the reward that you could get on the other side?
Oh, yeah. I mean, I think first and foremost, it's a very big, large benchmark name in the S&P 500. So if you don't own any of it as a long-term portfolio manager, then you're actually short it, right? And I just kind of felt like, wow, they have so much, their TAM, their total addressable market, they have so much opportunity in both, again, retail and also AWS. And then the latest story has been more the advertising model, the advertising piece, and they're taking share from the Facebooks and the Googles. And that's the story today. That's, I think, what's gotten it a little bit higher today. And so it all kind of feeds on itself. And then I just did the Peter Lynch method. Like, who doesn't use Amazon every single day of their lives? So valuation's always been a struggle, Scott, and I've always said that to you. I've tried to do a sum of the parts. I can get a lot higher from the sum of the parts.
We made a very big deal about it when you bought it for that very reason, knowing the kind of investor that you are.
It was hard. It was very hard. I think in my portfolio, it's a concentrated portfolio of 55 names, and I can own a couple of these kinds of names. And this one, to me, felt like it was the right one.
Joe, you own it as well, and it's a fairly recent addition.
I bought it on July 31st for two reasons. The confluence of momentum, the technical indication, and secondarily, what Stephanie just highlighted, and that was the profitability. And it was something that was unique, and you had not seen that when you were looking at Amazon and thinking about investing in it. It's a multiple story in terms of Amazon, AWS. That's a significant contribution. I think the acquisition that they have made with Whole Foods last year, again, it shows the intellectual capacity of management in this company going out and diversifying. So it's a more recent purchase. It's a purchase that throughout the month of August, I continue to add to, and a lot of that is based on momentum. I will readily admit that. So I would be paring back some of it if momentum perceives to go in the opposite direction. But I still like it, Scott, as a core holding looking forward. And it really is the fundamental story of, hey, here's the profitability. We're showing it to you.
Yeah, and then I go to the other side of the table where I don't think either one of you own this stock.
I own a ton of it, but I own it through ETFs.
Right.
If you look,
so does the rest of the free world for the most part.
Well, that's actually a great thing for investors, that something like this is as widely owned as it is in both the S&P. It's a huge chunk of the Qs, and people have gotten the benefit of what this company has done, which I think goes back to a very important concept, which is that people who take risk are rewarded for taking that risk. And if you've owned this company in any way, shape, or form, you've been rewarded.
As scary good as this story is, and it has been, Jim, does any part of you watch the incredible market cap ad that this company has done in a relatively short period of time? That, coupled with Apple hitting $1 trillion a month ago today, and say, you know what, it's representative of a market that's starting to feel a little frothy?
You know, Scott, I understand the question, and it's the right one to ask, but the straight answer is no. This doesn't faze me at all. You know, I think back to the movie Apollo 13. When the rocket took off, I don't think it was carried live, right? You'd already had 2 moon landings. It was already done. I think this is good for the market in that regard. This is not going to be new after Apple hits $1 trillion. Google has another 20% to get there, but now I think we're getting sort of used to it, and I think that's fine because this is an arbitrary line in the sand, $1 trillion. It does come down to valuation. Now, just to look at Apple, which for a value guy you can focus on more, I look at that valuation. I see nothing wrong with it. I'm not going to take a shot at Amazon. The thing is a juggernaut. But my point being is $1 trillion is really a meaningless line in the sand.
Josh, you have a reaction to what he said? Because I saw your facial expression sort of react to something.
I'm a millennial, so don't read too much into that. I did roll my eyes when he said the word valuation, because if anyone's learned anything over the last 25 years, it's that valuation is less important than growth stories that are secular and sustainable. And ultimately, valuations will catch up, or I should say fundamentals might catch up to where people are valuing things, not in all cases, but Amazon's a really great example. And I think we're so lucky to have Stephanie on the show and sharing her insights, because she's someone who is a value investor, but she understands a couple of very important things. And one is that there isn't one metric on which to base a value thesis. And then another thing is that value is relative, and people will put a higher value on a business that's growing in the way that Amazon does, provided that there's evidence that that growth can continue for a long time. And she did both of those things and was rewarded, and her investors were rewarded. So I think just this concept of, oh, well, the PE ratio, or there aren't earnings, or like anyone that's been investing on that basis and shorting stocks on that basis is just completely blown out of the game at this point.